and welcome to Property Pulse. My name is Udodiri Elizabeth, a realtor with Keller Williams. I am your host for tonight's podcast. Tonight, we'll be talking about a very important topic in real estate: how to save for your down payments. How to save your down payments for those who are going into real estate. This is an essential part of real estate. Tonight, I'm excited to be joined by our guest. Her name is Helen Okhiriah, a mortgage specialist with Akal Mortgages, who will be sharing insights on what home buyers should know about down payment. So sit back, relax, and let us dive into our conversation. Once again, welcome to Property Pulse. So I'm going to give the next voice you're going to be hearing now is Helen. She'll be telling us about herself and introducing herself. So Helen, please tell us about you.
Thank you very much, Elizabeth. Thank you for having me. I mean, it's an opportunity to be with you on this podcast. All right, as you have introduced, my name is Helen Okhiriah. I am a licensed mortgage broker with Akal Mortgages. Um, yeah, I've been I've been with this industry, though, like I have over 15 years banking experience. Yeah, but
Wow.
upon relocation to Canada, I decided to do this. This is what I've been doing, and like continue with the same industry, helping clients to get their dreams come true,
Yes.
getting their first mortgage, their renewal, and advising them in the right way. So, thank you once again for having me.
You are most welcome, and we are so excited that you're joining us on today's podcast because we really want to understand down payments. In the course of this real estate journey, you and I will work on certain deals together. I know I've had clients, when I mention down payments, they go from 0 to 100. They're like, why? Why down payment? I thought the bank is going to be giving me a loan. Why are they collecting down payment? So we would like you to tell us, why is down payment important when buying a home?
All right, thank you. So down payment is the money you as a client or you as a buyer, the money you put up front, right, when buying a home. It is your initial contribution towards the purchase price. Okay. While the remaining is covered by the bank, all right, by a mortgage, which is the mortgage loan. So that is covered by the lender. It is very important because, first of all, it is statutory that you put down a down payment,
That
right?
is,
You
it
have a
is by
down
law.
payment. Yeah, by law, that is what the law recognizes, that you have a down payment, right? So also it reduces the amount you borrow, right? Assuming you are buying a house of let's say $100,000, and you are doing 5% of it, which is 5,000. So which means what the lender is giving you literally like 95,000, right? So it reduces what you borrow, and also putting your down payment down reduces your monthly pay. The more down payment you put down, the lesser your repayment, right? Either monthly or bi-weekly. Okay. So it also reduces the interest you pay over time. Okay, right? And it first of all it improves your chances of getting a mortgage, because you can't go to the bank or the lender and say, I want a mortgage and I do not have a down payment. So that I can assure you, you will likely not get that loan approved. Okay. So, yes, also having your down payments, it shows your financial stability. All right. So lender want to see down payment. They see it as proof that you can save money. Okay. So then another very important thing is that your down payment also affects the mortgage insurance. Okay. So there is this CMHC insurance pay, right? Which in most cases, when you are able to pull down up to 20%, that insurance is actually waived. Okay. But anything less than 20%, you pay that insurance. If you have 5%, if you have 5%, that CMHC insurance fee is like 4%. Okay. When you have 10% contribution, then it is reduced to like 3.1. Then when you have 15% contribution, it is around 2.8 thereabout. So the more money you put down, the lesser the CMHC insurance you pay. So yes, down payment is very, very important. And another very important thing is that it helps you build your equity immediately. All right. For a client now, a buyer who is able to put down like 5%, another buyer is able to put down maybe 20% or 25%. So by the time like that house you've taken possession, that 25% you have down, it's your equity. So the more down payment you put down, the faster it is for you to build your equity. Okay, so those are all the importance of having down payments, right? Before getting the mortgage. Thank
Wow.
you.
I want to say thank you for a detailed explanation on down payments. Now, that CMHC, for the benefit of those listening to this podcast, I want to give them the full meaning of the CMHC just to touch on it. So it's Canadian Mortgage and Housing Corporation. It does protect your mortgage. It's an insurance. So maybe after this podcast, if you want to connect with Helen to talk about CMHC and get educated on it, I can always provide you her contacts. Maybe if you want to share your phone number, like maybe just mention it so they can reach you or something like that. Because I know after this podcast, there will be a couple of interested real estate buyers, home buyers that want to reach out to you to talk about one or two things, just to get more knowledge on what they're
Sure.
about to go into.
For sure. Yeah, for sure. Like you explained, yeah, that CMH usually the conventional loans are 20%, which means the buyer should have 20% down. But the government over time say that many people struggle with that 20%. So that's why they said, okay, if you have 5%, if you have 10%, 15%, you can. However, it will be insured by the government. Okay, that is the essence of that's the CMAC insurance. That is what it's for. And like you mentioned, my phone number is 204-914-4058. That is my number. I can definitely like find a way to display it before the close of the podcast.
All right. Thank you so much, Helen, for that explanation as well too. Now, what is the minimum down payment required for first-time home buyers?
Yeah, the minimum is actually 5%. Yes, the minimum is 5%, while the bank, finances 95%.
Okay.
Yes, that is the
Awesome.
minimum.
Awesome. So,
But then let me be clear on this.
okay.
The minimum 5% is on the first $500,000. Okay. For example, if you're buying a house of 600, assuming you have a client or you are a client, you want to buy a house of $600,000. Okay. The first 500,000, you can do 5% of it. Then anything above the 500 will be 10%. So that 600,000 house now, the first 500 is 25,000, right? Then the 100,000, you will have to do 10% of that. So that would be 25,000 plus 10,000, which makes it 35,000. So that's how it is. But if you have anything less than 500,000, if you are buying anything less than 500,000, the amount, the minimum is 5%. So once it crosses 500,000, the balance over the 500,000, you pay 10% of it.
Awesome. Thank you for that breakdown explanation too on that. So, how much should people realistically aim to save before buying a house?
Thank you. Very, very important. This this question, it's so important, all right? Because me and you, we've worked together before and we've
Of
seen
course.
cases of client like, oh no. So what is there is that there is just have enough money. Apart from your contribution, there is also closing costs. Sometimes it comes to some buyers as a surprise. Okay, have enough, have enough money to cover your down payment and closing costs. And to a large extent, I would say that amount largely depends on your budget, right? On your budget or the cost of the house. Okay,
Yes.
because the more, if you're buying a house of maybe $700,000, or somebody who is buying a house of $300,000, there's definitely that difference, right? So the closing cost is going to differ. The contribution is going to differ. Okay, so it depends on your budget, the kind of house you're buying, and once that is done, I will always say meet with a broker to help you plan towards all this, to know, okay, like how much realistically you should be looking at for closing. There are sometimes costs to, like appraiser, if appraiser is required. So those are all the things, yeah, do you need to like bear in mind, all right, when planning your savings.
Beautiful. I like that we're talking about this savings part because I've had clients who have come to me. They are planning about the real estate journey. They don't know how much. So I believe when they listen to this podcast, that will give them an idea on what to do in terms of saving or what
For
they should
sure.
be targeting to save.
For
So,
sure.
and now for our benefit of our listeners, those who would like to connect with Helen, her number is below her name. So as you listen to the podcast, you watch the podcast, you want to connect with her, you can always reach her on that phone number. Now, back to our next question. What is the biggest mistake people make while saving for down payments? We've actually had lots of clients in this
A whole
situation.
lot.
You know, they are,
A whole lot. Sometimes, yeah, a lot of mistakes is that some only just focus on the closing costs. With the recent one we had, you saw how dramatic it was. Their only focus is on the down payment. When you tell them any other thing, it's like, no, I'm not aware of this. So mistake number one can be focusing only on your down payment without considering that there is a closing cost. Sometimes approval, it's not in all cases we do approval. Sometimes when we are using like rental income, there are times the lender want to see fair market value. Okay. So at that point, usually we'll call for appraiser, and most time it's the client that pays for it. So there could be appraiser cost. Closing cost is a must. So usually budget between 1.5% to 2% of the sales amount for closing. All right. Then another mistake can be waiting too long for a perfect down payment. Why the cost of home
It's going
rises,
high.
inflation is going up, right? I mean, the market forces demand supply. The demand is high, and I want to believe sometimes inventories are low. So when you are waiting for that perfect time to have it all saved, before you even know what is your the price must have even overtaken what you've saved. Okay. Then another thing, sometimes don't buy based on like the maximum, maybe pre-approval. Okay. Sometimes a lender can give you a pre-approval of maybe, oh yes, your income is your family income is good, you're earning big, yeah, we can give you $1 million. But you know within you that that repayment will be tough for you. So you definitely don't have to use up all that amount. Okay. If you are pre-approved for 1 million, you don't have to buy a house of $1 million. Okay. So cash flow is also very, very important. Then another thing, not budgeting consistently, you know, saving what is left instead of treating savings as a bill. Yes, you treat savings as a bill. I know my phone bill. I know how much is it. It's fixed. Okay, so at that point, I'm not going to say like, okay, what is left is what I will use to pay my phone bill. No. That is how your savings should be. Consistency. All right. Don't treat savings as, well, after I've paid everything, whatever is left is what we save. No, because your needs will never end. You will,
No,
there are always things to do. So,
no.
but when you know what you want and you say, okay, you see this savings, if it's 10%, if it's 20%, as the bills are taken, you take that away. Okay, be consistent with it. So that is how to treat savings. Treat
Yeah.
it as a bill and not like a leftover. Okay. So with all this, if you are able to avoid all this, okay, don't focus only on the down payment. Try, and have like sufficient amount. Okay, don't wait too long. Immediately engage with a broker, engage a realtor, engage a financial advisor. Funny enough, you don't even pay for it. These things are free.
Free
Okay,
service.
so why wait? Why keep quiet? They will advise you. We will advise you in the right way. Okay, so yeah, those are most some mistake that people make when trying to planning to buy a house.
Sorry, just to add to what you said about keeping the money sitting in the bank. The bank would, I know this for sure, the bank will want to see how you're making your movement in and out of your account, right?
Mm-hmm.
Because they are
Mm-hmm.
reading the statements.
Yeah,
So,
yeah, for sure.
so
Exactly.
thank you for that. Now we'll go to our next question. How early should someone start saving if they plan to buy a house or a home?
Well, I mean, start as early as possible. Just start as early as possible.
The
Sometimes.
reason why this question is because I know that there is a 90-day period I don't know if that
Mm-hmm.
applies for someone who do not understand that 90 days, when can they start?
Well, yeah, I mean, the fact is there are, I know sometimes, like maybe initially we didn't really talk about the sources where, okay, maybe I will just quickly review this where you can get like the sources of savings. Okay, you can get savings from your own, like your down payment can come from your own savings, right? Money that maybe you work, as you earn your salary, you take some part away, you keep. That kind of money should at least be in the account for like 90 days, okay? Another source of down payment can be a gift, okay? You can get gift 100%. A sister, it has to be a close relation, a sister, a brother, parent, or spouse can gift you.
Not
And
a
with
friend.
that, yes, so with that gift doesn't necessarily have to have been in your account for 90 days. No, gift can be like anytime.
Anytime.
But there has to be, if it's a gift, it has to be proven. There is a letter we will send to you, then the buyer will give to the whoever gifted him or her, all right, to to fill, and we will send to the lender. Okay, then there can also be maybe sale of asset. You can also have like sometimes maybe sale of existing house. Okay, right? So yeah, it's like personal savings. Sometimes, yeah, the bank wants to see, yeah, it has to be in your account for 90 days. However, there are exceptions to the rule. Okay, we can always work around it, even if, but most times the bank is very big on documentation. All right, documentation. Even if the money has not been in your account, assuming it's your savings, okay, it's your salary, you move there. Let there be a trace. Okay, this is all done to avoid anti-money laundering and all that. Okay, okay. Sometimes we've seen bank reject transactions. Okay, at the last minute because of down payment that
Wow.
could not be explained.
Wow.
You're just doing a large amount of money in the account. Like, where is this from? Even if it's foreign money, the bank wants to see where is the wire transfer. Okay, where is the wire transfer? Okay, what led to it? Did you sell your property? Okay, was it, there should be, if you say A to B, there should be that trace from A to B. All right, so it must be explained as well. All right, so yes, if you don't have, or if the seller don't have all this, like you are not getting a gift, you are not selling an existing, as sometimes some people use their, like one of the our client that we did together, there was, I think, from her returns, she got quite some money from her this year return when we do our
Income tax.
annual return. Yes,
Income
yeah.
tax
So those
benefits.
yeah, those are fine. Though when they see it, oh no, it's her return. So the banks are fine with that. Those such money doesn't need to be in your account for 90 days. No, they won't consider that, right? So if you, all these things are not, they don't concern you, like you are not expecting a gift, you are not expecting anything, just your savings, yeah, try and make it like it should be in your account at least 90 days. Yeah, your household income too. Sometimes some people have large, like their income is huge, they may not really, like a little time of savings may just give them what they need. Okay, and also the amount of property. Somebody who is saving to buy a house of 500,000 and somebody who is saving to buy a house of 250 would definitely not not be saving the same thing. All right, so
Yes.
yeah, it all depends. Yeah.
Awesome. Thank you. Now, what budgeting strategies help people to save faster for a down payment?
Like I said, treat savings like a bill.
Okay.
Treat savings like a bill, not leftover. Don't
Not
treat
like
it like a leftover. If you treat it like a leftover, um, that is not a good strategy. You won't really get what you want. Okay. But when you know, okay, my budget to get a house of 450 and I want to put 10% down. 10% of 450 is 45,000. Okay, you know, okay, how if I save what do I need to save to be able to get that 45,000? Assuming you are maybe spouse, maybe both of the spouses just like work together. If the person is married, I will say okay, like do it as family. But sometimes, yeah, that may not be the case. If you are not married, you are doing it alone. So you now look at your income and like, okay, how long do I need to save for the 5,000? Remember, there's also closing costs. So if you're 45,000 or half of it, you want to put 5% down. 45,000, okay, that's like 22,500. Look, okay, if I do this in 1 year, there is a client now I'm working with. She told me she wants to get a house next year. Okay. So what she did is that there's this contribution we do, right? So, and I think there are 12 of them. She wants to carry the last and the first. So the contribution will end in December. Okay? She wants to take her own contribution in December. Then next year she will carry again in January. That is strategy.
that's
All
strategy,
right.
actually.
That's
Yes.
strategy, right? That's very strategic. So
No,
at
seriously,
that
it
point,
is.
so she put the money together 10,000, 10,000, or 12,000, 12,000. That's 24,000. Okay. So she has 24,000. She told me she wants to get her house early next year. And when she told me the plan, I'm like, wow, that is that is so good. So she just worked out what will work for her. And this is already July, all right? Before you know it, her 24,000 is right there, and we are already, talking about getting her a place, okay? So you just look at, different things work for different people. If you know, okay, this is what I want, this is what I want, work towards it, and you can really achieve whatever you want to achieve.
Awesome. Thank you for giving us an example, a practical example. At least for
Yes.
those who are listening or watching the podcast and planning to buy a house, at least this could give them an idea on how to go about saving for it. One strategy. I mean, look for anything that works for them, but in as much
Mhm.
as they can be able to prove where the finance is coming from, follow the right procedure or protocol by law or
Yeah.
policy by law so that they can be able to buy that house, that dream home that they are looking at to buy. So, our next question: should buyers pay off debt or save for a home at the same time? Because
Very tricky
I know
question.
debt is a big factor.
Oh,
You
yes.
said it in the course of the discussion that while
Mm,
saving for your down payments in the bank, you still need to pay your usual bills. Those are debts.
yeah.
So,
Yes, for sure. Yes, saving for the house and also paying debts. I would say, like, if you can do the both, just do them. Okay. A simple rule would be pay up the high interests, the debts. Okay, like credit card, they are very, very high. All right. When liability is too high, like it can really mess one up. Okay, it can reduce the amount you get approved for. Okay, and sometimes you may be asked to put down more down payments because those figures just have to work. All right. I did forget to mention that another source you can even get down payments is also borrow. All right. You can actually borrow. You can take, as if you have line of credit, you
Okay.
can borrow from your line of credit.
Okay.
This is a bit tricky. However, there is, if the ratios, because when you have line of credit or when you have like credit card, there is, when we are doing the underwriting, a percentage there is a percentage that is used to calculate. Usually we use 3%. All right, that, okay, assuming you're owing 5,000. Okay, assuming the balance on your credit card or your line of credit is 5,000, then we'll use 3%. So we assume that that 3% is what you are repaying every month. Okay, so the thing is, if we put in that 3%, will your ratios still be able to carry it? If you're already very indebted and that is added, it just makes the ratios go up. Okay, so the ideal thing is if you can pay up as much as your loans, your debts, the better. Okay, there are some times when we are doing like underwriting, we want, okay, before the disbursement, we want you to pay up this credit card, we want you to pay up this line of credit, or reduce this line of credit to this amount. Currently is 12,000, reduce it to maybe 8,000 before disbursement. Okay, sometimes those are conditions just to make the figures work. However we do it, your GDS shouldn't be more than 38%, and the TDS shouldn't be more than 44%, except that's for A lending. Except maybe if it's too high, you may now need to maybe be doing B lending, which invariably increases the interest rate. So, but most time we do the A lending first. Okay. So the higher your liability, the more money you may be asked to put down. Okay. And yeah, the lesser money you may be approved for. So it's better to keep it low, keep your debt low. Okay, so that would be my advice for treating like the both, which one should do first. Yeah.
Okay. Wow. That's another interesting one. Because the topic today is down payment, how to save for it. So this one is crucial. It's very, very important. We
Very,
do not want
very.
to miss this part of the process of saving for a down payment. So that at the end of the day, that down payment will be saved and the goal for the down payment will be achieved. Our next
Exactly.
question goes like this. How can Are there special savings accounts that works best for future home buyers?
Oh, for sure, for sure, for
Okay,
sure. In Canada, yeah, there is like your RRSP.
okay,
Then we have the FHSA and TFSA.
okay.
Those are accounts that are like tax deductible. All right. So the FHSA is specifically good, like it's just first home savings account, which was introduced by the government. And every year you are able to save up to $8,000. if for married clients, the wife can do, like both spouses can have, which means in a year they can both save 16,000, like 8,000, 8,000. All right.
Okay.
So, which is a maximum of, I think 40,000 in a one lifetime. Yeah. And the beauty of it is that when you use it to pay for a house, you don't pay any tax. All right. You don't pay, it's tax deductible, which means, you know what I mean by that. Okay. Then there is also the RRSP. Okay. So for RRSP, there's the buyer's plan there, which means you can draw an amount. It was 35,000. I think for now it's about 60,000. I can confirm that, you know, you can draw that from your retirement savings plan. Okay. However, the difference between the RRSP is also tax deductible. The difference between the RRSP and the FHSA is that for RRSP, you are expected to pay it back in 15 years.
Okay, that means it's like
Which,
you're borrowing from your RRSP
thank you. You are expected to pay it back. If you don't pay it back, then the government will tax it.
with assets.
Yeah, we tax it. Yeah. But for FHSA, it's not like that.
Okay.
So yeah, but sometimes people may say, "Oh yeah, I saved it." I mean, there could be exception. Maybe at the end you didn't buy the house. Okay, so or it can, if you decide, okay, I'm not buying the house again or whatever, it can be transferred to your RRSP or your REEF accounts. Okay, that's for FHSA. It can be, yeah, it can be transferred into your RRSP or your, yeah. But if you want to draw it aside, like, I'm not using it to buy a house again, I just want to take my money, then it will now be taxed. Government will tax it at that point. So those are vehicles that you can use. Then TFSA as well is tax-free savings account, which you can use to save. Then at the end you can draw from it to get your house. Okay, so yeah, these are all ways. If you feel like you are not disciplined with your ordinary savings account that will just have debit card and be taking money whenever you want. But all these ones will help you. Yeah, I mean, you can't just have access to them.
To them.
It's only when you need it, because they are investments. If you need it, you have to let the bank know. They have to liquidate it and sell the funds. All right. So that's it. That is how those runs, and they are very good. Yeah,
Nice.
they can really help you, like, have that discipline, that culture of saving. You can even put, like, these direct debits. Sometimes you can put direct debits. Okay, like the money should be taken out from your account, maybe bi-weekly. As soon as your salary comes, you can put such instruction down with your bank. Yeah. So,
Okay. Wow. This is amazing. This is really, really interesting. I mean, you've talked about first home savings account, the benefit of it, registered retired savings plan. You've talked about
yeah.
that one. You talk about the tax-free saving and how all these affects someone who wants to buy a house. So
Yes.
please, if you have questions and you want to know more, you can feel free to call Helen on that number that is under her name, and she will explain, take her time to explain more of what you need to know regarding down payment, the TFSA, the RSP, the first home savings account, and how it affects you buying a house. Wow. So we'll go to the next question, which is how can couples and family save effectively for a home, couples and family, those who want to, do the work together. Because for some people, buying a house can be challenging alone because there is a lot required. I call it a project.
Oh yes, it is a big project. I mean, mortgage, like buying a house, is one of the biggest investments in one's life. Is, I say, one of the biggest. Okay, I mean, that is a that is a big, it's a big one. All right. So couples, when there is, the Bible talked about when one chases 1,000, and two will chase, will put
10,000
10,000 to flight. So that is it. Definitely, if one person is doing it and two people are doing it,
is
it
easy.
definitely becomes easier, okay, for two people. Like the FHSA I talked about, if one person, you can do a maximum of 8,000 in a year, all right? Then if there are two, this one would do 8,000, this one will do 8,000. So that's 16,000 from one family in a year.
Nice.
So if you put that together over time, you will see that these people, two of them would definitely be like putting the two together, will be, what they will be able to gather at the end will definitely be more than when one person is doing it. All right.
Hmm.
So yeah, that is the advice. If two of you want, if you are both buying the house jointly, then both people should save together. And for RRSP as well, if they both have RRSP, they can pull from it. This one can pull from the RRSP, the spouse too can pull from the RRSP, and they put it together, and that will really form a big down payment for both of them. So yeah, the ideal thing is to work together, but I mean, life is what it is. Sometimes it's not just there. So, but yeah, but if they want to work together, if they are buying the house jointly, it's advisable for them to, you know, to, when, like, combine their resources, okay, and with that they'll be able to have more money to put down as down payments. Yeah.
Beautiful. Now, what role does credit score play when saving for a down payment?
Yeah, credit score is like your scorecard, right? It shows the lender your capacity, your character. Very important. Are you missing your payments, right? Because when we are reading credit score, everything is right there. If you've missed over 30 days, if it's within 30 days, the number is there. If you miss payment, the number is there. So the lender wants to know why, what happened, why is it two, why is that number in the month of this, why is it two, why is it three?
So,
Okay,
are you
so
are you saying that when the lender are looking at people's finance based on
mhm.
credit score, they would ask all these questions individually to hear from the intended buyer and person that is
For
buying the
sure,
house?
for sure, for
Okay.
sure.
Wow.
Like I said, it's a scorecard. If you mix your payments, if you mix it, is there.
Wow.
It's right there in your credit score. Yeah, that you
So
mixed the
nothing,
day
nothing,
you.
nothing is hidden.
Nothing is hidden. Nothing is hidden. If you miss it by 30 days, sometime where lender can say, okay, sometime you may forget, sometime you travel. But if it's now two, they want to know this is like over 30 days.
Wow.
If it's three, this is over 90 days. So at that point, what's your excuse? So everything is there. That's why it is very, very important. So even if you don't have, like, maybe clear all the balance, that if it's credit card or if it is line of credit, there is this minimum payment. Please always pay it.
Pay the minimum.
Pay the minimum.
Okay.
Pay the minimum.
Okay.
Yes, don't let it like, oh, they will, because they will always put it there. Your due date of pay is this. Please pay it. Because when you don't pay those things, it shows on your credit report. All
Oh,
right, and those are the things that reduces one's credit report. So everything is there. It shows the bank your character, like how do you treat stuff, or do you have like if the person has been bankrupt, or if the person if you have a loan recovery, like there is a bad debt that is in recovery. So they want to know, okay, what happened. All right. So those are it is sometimes too, when the credit score is low, like right now, if it is like the A lenders, the cutoff is like 600. If you have anything less than 600, which there is still that, like there are alternative banks that will now make us to be thinking of B lender, C lender. Okay. So what I always tell people is there is always a way out. Even if your credit score is low, we can still work out something for you.
okay.
Okay? Just contact us. There is always a way out.
We are.
We will always work out something for you. Yes, sometimes, yeah, it may not be like, okay, we do a lending, but there is still a way out. We will
There is
always
hope. There
work
is
with
hope.
you.
There
Yes,
is
there
hope.
is hope. It doesn't mean even if your credit is bad, there is no hope. There is hope. Do not let that deter you. Sometimes some people do all these things because of ignorance. They may not even know,
Yes.
right? Yeah,
Yes.
but don't let that scare you. Come, we will work out something for you, and that dream house you can
You will
still get.
buy it.
You will buy it. Yes. We don't take no. There is always a way. Even if B doesn't do it, we can do C. I mean, there are always ways around it. Yeah.
I love what you just said now. You said people do things maybe out of ignorance, and that is one of the reason why we have this podcast. This podcast
Mm-hmm.
is the podcast where we want our um, listeners, viewers, clients, first-time home buyers, those who are looking into becoming a real estate investor, to come here and listen to the podcast and get educated. Now,
Mm-hmm.
Helen, the mortgage specialist, is saying, do not lose hope. Call the number 204-914-4058 and talk about that situation or that challenge that has got to do with your mortgage. She would always sit down with you, look at your situation, and come up with a good plan that will fit and suit your buying need in terms of the house. So don't give up that hope of buying your home or owning your home or building equity in Canada, because having your own home is something that has lots of advantage. It does have lots of advantage. So
Sure.
no matter what it is, call Helen, talk to her, and a solution is always there to fix
Certainly.
that credit score, to getting your down payment ready for that dream home.
Absolutely.
Now we're going to jump into the next question because this is getting interesting. Although we're coming to the end of the podcast, this is the last question for this episode. Then you give us your final thoughts. We may end up calling you back again for the
No
same topic, more
problem.
like the part B of it, because we really want our listeners, our clients, to be well informed as they buy their home in Canada. We do not want anyone to fall into those red flags anymore or have
Sure.
issues anymore. So now, what government program or grants can help first-time home buyer with down payment?
Yeah, that question is very related to, like, relatable to what we answered, like you asked it before about the savings.
The savings.
About the
Okay.
savings, yes,
Okay.
the ways to save. Yes, so this, like the FHSA is government, it's a government program to help the first home first home buyers, and that's why it is tax deductible. All right, so the FHSA, your RRSP, so government have put plans to know, okay, because sometimes when people want to save, sometimes savings may not be easy, but when, because all these vehicles are things the government put in place to help you, all right, to help you, the first home buyers, first time buyers, to help them save and take advantage of this kind of investment. Okay, so that's really like your RRSP, the ability for you to take money from there and pay back over 15 years.
15 years.
Mm,
That's a long
yes,
time.
15 years. It is a long time. I had also explained that the FHSC, you don't pay that back once you pulled it out to get your house, your first home is actually first time. Especially for first time, there are really a whole lot that like that the government is helping them with. Sometimes your second home may not be like that, but especially when you are buying the first time, there are really some leverage that you can that you enjoy, as first time home buyers. Okay, so yeah, those are all the vehicles you can that will help, and these are all government programs, to help, you know, people who are new to Canada, people who are, even sometimes, maybe even when you are new and it's your first time, sometimes some people may not even have credit. Some may not have worked with clients who just believe everything is cash, no credit score, no history, no history. But that is a bit difficult for the bank to deal with. Okay, let's delay this. Let's reapply in just few months. Okay, go to the bank, take a credit card. All right, just
Ooh, so
to
that means
build.
they still want you to go through this process as well,
Yeah,
even if
yeah.
you have the cash to pay.
Oh yeah, because these clients just believe, the way, like, we believe is, we don't do credit, like, based on where we are coming from. We
Coming
don't
from,
do
yes.
credit, right? So people come sometime with that mindset. Everything is cash. Their phone is cash. Everything is cash. Or
Pay
they
as
will
you
have
go.
is they will have a debit card, debit card, and use it to pay for everything. But a time comes when you want to get your mortgage and the bank cannot see your credit history. It's a concern.
Is a
All right.
concern.
Yes, they
Wow.
want you to have a credit history. At least your phone bill. Okay. At least your get a credit, even if it's just $1,000. Use it, pay back, and build history. Is very important, because some people here will say, oh no, I don't need the money, I don't need credit. You need it. You don't need to be highly indebted. Yes, you don't need to be highly indebted. Just take a simple credit card, use it, let that be history. Let the bank see, okay,
Let them see
let them
your
see you.
finance habits,
Exactly,
your
that you
finance
pay
character.
back. Yes, so it's that is very, very important, because some people also make that mistakes. Some people make that mistake, but it's not to their best interests. If you don't have credits, yeah, they believe I'll pay everything, I'll pay it with my money. No, no. So when you want to get a mortgage, it becomes an issue.
An issue.
So, yes, for sure, we always work around it, but I'm advising now in advance, if you are in that category, if you are that big guy, like, who believes, okay, I have my cash, I have my money, I'll pay for everything. Just have one credit card. Use it, pay for it, use it, pay, repay, then like that. That will build your history.
This is a very important part because I have had a client that wanted to buy a house, property worth I think 150. So he said, I have the money cash. What if I don't want mortgage? So I was working with another mortgage person
Yeah.
and she was having difficulty managing that situation because it all boils down to we want to see your finance habits in Canada.
Yes, yes,
So I went
yes.
back to my brokerage. I presented the situation. They were like,
Mm.
Elizabeth, do you know the reason why we use FinTrack? We want to know where the finance is coming from.
Coming from,
Everything in
exactly.
Canada is how will I put it? It has to be transparent. It has to be by the
Exactly.
book. So yes, he
Exactly.
may have his money, but the bank will still question a lot of things,
Sure.
and they may still tell him to like go and do the due process.
Yeah.
So
Yeah.
when I came back with my findings and I told the client and the mortgage person did the same thing, he got a little bit tired and he would say, you know
Oh,
what, for now, he
I'll
has to
just
go
leave
and
it.
do what he needs to do. And that was the end of that particular deal.
Wow.
So
Wow.
I thank you for how you have actually educated us with the down payment topic today. Now, what is your final thoughts before we call it a day for today's podcast? Your final
Okay.
thoughts, yes.
Thank you so much. Thank you, Elizabeth, for having me. I mean, when we share this thing, we also learn.
Of course.
Okay. So my advice for you out there who is planning, to get a house, first of all, I would say do not take any major debt like car loan or
Okay.
more credit card. If you have one or two credit card, that is fine. You know, I always will like to tell whoever cares to listen, please do not take car loan. Buy your house first before you take a car loan, except maybe you are using the car for your business, maybe Uber, and that's what you do, and you need a certain grade of car. That's it's okay. But if it's just for like the everyday use or something, I would say try and get your mortgage first, then you can get a car loan. Okay. Then secondly, like I've said, since treat savings like a bill, not a leftover. All right. Then finally, I would say talk to a mortgage broker if you are planning to, okay, even if it's next year, 1 year apart. Okay, I want to get it. I'm planning to, or a financial advisor. They will always advise you, okay, how much do you need? Okay, sometimes I've even had to pre-qualify people, because when you don't even ask, you won't even know how much you need. There are some things you may not even be thinking is, you may thought this is never even going to happen. It's impossible, but it is very possible. All right. So we don't charge money. I don't charge money. All right. I will gladly, listen to you, plan with you. All right, plan your finances with you, while you are doing your savings or working towards getting the house. Yeah, those are the things. Or a financial advisor who will, like, okay, you want to save, okay, help you set up the account. And sometime financial advisor will be able to tell you, okay, if it's in 1 year, you don't need to buy the invest funds that are aggressive or those non-aggressive things like that. A financial advisor will be able to advise you in that. So, but that is it. Talk to a mortgage broker, and you will be fine. There will always be a way. We help people. We help you, achieve your dream home. All right. Take the stress off you. We'll come to you. We'll meet with you I and Elizabeth, we've had to have meetings before at like late night, at midnight, at 12 a.m. We've had
1
meetings.
a.m.
Yeah,
1.
we've had meetings before. So, and that is how we treat our um our clients. We treat you with respect, and we carry you on our head, and yeah, we are professionals. And at the end, you will have every cause to smile. So,
Yes.
thank you so
Yes.
much,
Well,
Elizabeth.
thank you, Helen. Now she has said, call her. Her number is 204-914-4058. Her number is below her name. Call Helen and talk about that mortgage situation. Do not let anything discourage you. And guess what? Helen works with one of the good financial institution, Akal Mortgages. I know a couple of clients I have worked with Helen, how the mortgage was going to be a challenge. Even Akal Mortgages stepped in and they did their big one, they did their magic. At the end of the day, the client bought their house, got their keys, they moved in. Helen guided them nicely, told them what they need to know, follow up with the underwriter, sat down with the management, had couple of meetings to see that the client gets that key at the end of the process. So, what are you waiting for? Call Helen. And thank you for joining us in today's podcast. I remain your host, Udodiri Elizabeth, a realtor with Keller Williams. So have a wonderful evening till the next episode. Bye.
Bye.